Check, please.
Welcome to Everything Money. If you're out there in the world like a normal person like me, you see a housing market exploding. Let's buy a house. You see, for me, magic cards going up in value. Now it's a time to buy. You see the opposite. Things are tanking. Why would you ever buy this? I had just asked Paul, what is the concept of recency bias? You might be experiencing it yourself and you don't even know, but it's very important in investing. And we'll tell you why. Go ahead, Paul. Tell me about this.
You are 100% experiencing yourself. Everybody does. And there are positives and negatives to both. All right. So recency bias is you're putting more value to what's happened recently as opposed to long-term events. This happens all the time in investing. That's where the phrase, it's different this time, comes from. People look at what happened recently and say the rules of the past don't apply. That's to this T what recency bias is, that it's different this time. And it's not. Now, what is a positive? The negative to recency bias is you ignore all facts of the past and say, nope, it is different this time, and you end up suffering because that will end up happening. You'll end up losing a lot of money because it's not different. Cash flow is still cash flow. $1 of cash flow is still worth X amount of multiple throughout history. But there is a positive recency bias. I have not asked Mo what it is yet, but let's ask him if he can guess what the positive recency bias is.
I don't know.
You're not going to try.
Positive recency. There's
only a huge positive. There's one that I could think of. There's one. I already told you earlier. There's one huge positive to recency bias.
Oh, taking advantage of everybody's irrationality.
There are two huge positives to recency bias.
You're welcome.
That's a good one. I can't believe I didn't think of that one.
I don't know what yours is. I don't know what yours is.
I can't believe I didn't think of that one. God, I'm so stupid. Here I am thinking I'm this like brilliant guy. Okay, there are two. That's one of them. The second one is what?
What is it?
When your stock that you bought for a value is falling, it allows you to sit there and say, let me reevaluate and make sure I still believe my thesis.
Yeah, so this involves an exiting position.
I wouldn't have got that one.
No, you wouldn't have gotten that one, but yours was so obvious that I didn't even get it.
We get this question a lot, Paul, is, we buy a stock, but we rarely go in depth about when we're exiting. And there's this, as you always say, there's a zillion reasons how and why to get out of a stock. But reevaluating is definitely a process that
because we could be wrong.
Yeah.
We could be wrong, and things do change. Information and values are always going to change your thesis. I love Alibaba at $100 a share. If it was $1,000 a share today, I hate it. Okay? Same company, same cash flow, same everything, but I'm paying 10 times more for it. Okay? That's the point. Now, Facebook or Alibaba, if all of a sudden it comes out tomorrow that there's all this accounting fraud and all the numbers are made up, thesis has changed.
Yeah.
So that's why you have to use recency bias to do like a check on yourself. It's a check and balance for yourself. Okay, the stock is down further. Am I missing something, or is it just the market being irrational? Go talk to people. We have our community for a reason. More on the community in a little bit, how you can get part of it. These have 6,000 people in here talking about their different ideas. Hey guys, this stock is still down. I still think it's a value play. What am I missing? Somebody might sit there and say, hey, I agree with you. Somebody else might sit there and say, well, wait a second. What did you guys consider this? I might say, yeah, I did, and I still am fine with it. Or no, I didn't. Thank you for the information. That is the point. That's one of the two benefits of recency bias. Are you doing God, that was great. I can't believe I didn't think about that one. Anyhow.
I didn't either. I thought that was it.
So what does it normally do? What does recency bias do?
It makes you think that you're
swaying normal people.
Well, Tesla's up a lot. Paul, you're wrong on Tesla. Okay.
I guess.
Alibaba's down a lot. Paul, you're wrong on Alibaba. Okay. But as I used to say to you in other videos that you love now, I will have, in order for value investing to work, basically the mass have to think I'm wrong at all times. Because when stocks are too high, Paul, you're wrong for not owning them. When stocks are too low because everybody's dumped them, Paul, you're stupid for owning them. That's the basic premise behind value investing. You got to buy out of favor things because out of favor things sell for cheap prices. Now, 80% of investments that are selling for value prices are probably junk investments anyhow. There's probably a reason why they're selling so cheap. But the 20% that's out there that has just a mispricing, that's your job. Figure out the mispricing. Yep. Guys, I've said this before, and I'll say it again. This community is so big for helping you combat recency bias. Seth, please tell them I can get the community.
If these value investing concepts speak to you, You can join the Everything Money community. You can get the software behind Paul, and you can have all this in the palm of your hands. By joining the community, you'll be joining thousands of people all over the world who speak and communicate just like you on these topics. We help each other. We work together. We day trade. It's incredible. You get the software, you get the data, and all the amazing tools that are coming out in the future. Go to everythingmoney.com or patreon.com/everythingmoney and join today. Along these lines, Paul, as I have been drawn to perhaps sillier investments by the recency bias of my friends in my environment.
Of course.
I've been drawn into Bitcoin schemes, overseas boat racing,
overseas boat racing.
Benihana.
That actually sounds better than
my Benihana short. I mean, my environment that I have around me at sometimes falls victim, I think, to some of this recency bias, obviously in a big way, because this is what drives the masses and their ideas. And so, I've had trouble.
Well, we're all programmed
with you convincing me of this. I mean,
we're all programmed in a certain way to even though we tell people that we're teaching independent thinking, we don't teach independent thinking, because guess what? What was the thing I read? Like, humans basically evolved into herd mentality. We evolved that way. We were, cavemen who were trying to who were struggling for survival. And how do you survive? By being amongst your people doing the same thing, right?
That is precisely it, Paul. We went to Paris, and we're tourists. We look like idiots. And if you see like a store and there's a big line, my wife is drawn to it like moth to flame.
I immediately walk away.
I mean, and I am too. What is this? What's so interesting? It could be a line.
Oh my God, isn't that incredible?
It could be a line for a firing range.
I literally see the line and go, let's go that way. But that's why I've been blessed with this programming, where I literally am like the stubborn person who goes, oh, everybody wants that. I don't want it. Literally, I see a line and I go, oh my God, get out of here. Same with investments. When I hear average people telling me how great an investment is, I immediately think, okay, it's got to be crap, because the masses are wrong. And I'm 100% right on that. Literally, the masses are wrong. It's not possible for everybody to be a smart investor. It is just not possible. It's not even possible for 1% of people to be good investors. Just remember that. And recency bias will tell you that you're wrong when you're actually right, and you're right when you're actually wrong. That's the problem. So guys, the benefit of all this though is we need this in order for value investing to work. We need the masses to do this all the time. And guess what? It ain't going to change. That's why I laugh when people say Charlie Munger and Warren Buffett are too old. Humans behave the exact same way they did 100 years ago and 200 years ago. It's just the stories are different. We had the tulip craze 400 years ago. There's been so many bubbles since the beginning of time. It does not matter. We all chase as a society certain things that will never, ever, 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 ever change. There is no way possible that ever change. Because if it did change, here's how investments would do. Ready? If all of a sudden everybody thought the exact same, I usually draw this graph and go, this is how investments go. That wouldn't happen anymore. This would be the graph for investing if everybody thought the same. That's it.
I was just going to say, the funny part about our channel is we're only going to reach a certain people out there. And if it reached everybody, our process really wouldn't work. We need...
Well, there's 2 billion YouTube watchers out there. And if we had 500,000 or 1 million people who bought into it, that's what percent? That would be like 0.3%. Okay, that sounds about right. All right.
That's about right.
0.4%, 0.5%, I don't know. Is it? No, it's not even 0.5%. It's 0.05%. Because 1% of 2 billion is 20 million. 1% of that is 200,000. So 0.05% would be 1 million subscribers. Okay, sounds about right.
Yeah, we're actually looking for that small number to say this makes sense.
And by the way, I don't need you to believe in value investing. We have the Bid and Ask Nation with Mo. Do you believe in processes? Processes win over the long haul every single time. If you have a process for day trading, chart reading, momentum trading, value investing, anything, you will do better than not having it. We were just talking earlier about day trading. And Seth said, I'm trying to pay attention to these rules and stochastics. I said, I don't even do the rules and stochastics. On the entry point, I do the engulfing candlesticks, but on exit, I do a trailing stop. Because I found in my years of backtesting things, basically, as long as you pick ideas that make sense, the way in which you exit, as long as you're exiting consistently, is pretty much all that matters. Mm-hmm. Now, I haven't backtested that on day trading. We're doing that as we speak. But in value investing and everything like that, it basically works that way. And now, guess what? I have some recency bias.
Go on.
In day trading, I've done this 0.75 trailing stop, and it's worked so far.
The hot hand
Could it be
theory.
a fluke?
Yeah, the hot hand theory.
Yeah, could it be a fluke? What if I been on the bad end of that deal where all of a sudden it didn't work for 3 days, where I've said, okay, it doesn't work? So that's why we do things and look over long periods of time. That's why recency bias is hard, because if you look over 100, here's the example. If you flip a coin 10 times in a row, what are the chances you have heads?
50%.
Every single time, 50%? Sorry. What chances you get heads 50 times, all 10 times?
Oh, very small, I would think.
It's 1 over 2 to the 10th power. If you flip a coin 1 billion times in a row, what are the chances that somewhere in there there'll be 10 heads in a row? There's probably a good chance it will happen. If you happen to be caught at that exact time, you'd be like, oh, heads only pops up. You never get tails. So you have to make sure that you're not just looking at the results recently, good or bad, and saying this is the future. I truly believe in back testing. And a lot of statisticians hate back testing, and I agree with them, because what people will do is they'll fit the data. Oh, what if I do that? I sit there with a thesis and then I back test it. I don't sit there and look at the history and go, where do I find patterns? I think of a thesis, then I back test.
Mo, don't we need this recency bias to take advantage of these swings in day trading?
Yep.
It's almost the exact opposite of value investing.
Yeah, exactly. The more volatility, the better. And what creates volatility? Wild speculation and people flocking to something. That's like when we see, I'm going to pull Nikola, for example. You know what, Seth? Yesterday when we were doing this, it was all of the EV companies were moving crazy to the top or crazy to the bottom. I don't remember what it was. Why? Because everybody's speculating on that industry at that moment in time. Okay, let's take advantage of it.
Yeah.
We want that. That's exactly what we want.